Hey there traders, this is Steve Mighty, the market chartist for FX Explained and our regular weekly MacroWatch update. Well, we've been away for a few weeks, but we're back again now. So this is for the week commencing the 12th of September 2022. A cross-asset class shift to risk on. Let's take a look first of all at those macroeconomic and geopolitical developments from the past week. Well, easing inflation fears seemed to be at work last week, possibly assisted by a midweek decline in oil prices to multi-month lows. In addition, the Fed's Beige Book indicated that price increases were moderating in 9 of its 12 districts. And Fed speakers Brainard and Mester also delivered comments that seemed to be more dovish than markets had expected. In Europe, various EU countries and also in the UK announced plans to deal with the energy crisis and boost their economies. EU energy ministers are meeting to debate electricity market intervention. And as markets had anticipated, the European Central Bank, the ECB, raised its key interest rates by a record 0.75%. And now let's take a look at those global financial market developments for the last week ending the 9th of September. Well, equities did rebound, breaking a 3-week losing streak. Is it a relief rally or is it part of the bigger recovery that was seen since the beginning of the summer? And European equity markets also indicating a base, holding above the lows posted in July and posting solid rebounds last week. US 10-year yields, however, continue to keep their higher yield progress intact, but did dip just slightly lower at the end of last week. The euro managed to rebound with broad US dollar weakness. The euro rebounded against the US dollar back above the parity level and indicating potential for a small basing pattern. And cable lost further ground, the pound losing ground to the US dollar down to its lowest level since 1985, but did post a decent bounce, a modest bounce from its lowest level since then, and signals a potential small bottoming pattern. And similarly, even though the yen went to its weakest level for 24 years, US dollar yen surging up towards the 145 level, it did see a notable decline in the second half of last week. So again there, a potential top in pattern going in for the US dollar versus Japanese yen. So we're seeing a turning not only in the US dollar strength, but also a basing from the equity markets as we previously looked at. Gold in here did post a minor bounce, but an inside weekly pattern, but indicating reluctance to go and challenge the July lows. And crude, as we've already said, pushed to another new multi-week, multi-month low in here. Its lowest level in here since early this year, indicating potential for a more negative oil theme. And again, as we said, easing inflationary pressures. And copper managed to bounce as well, holding significantly above the July lows, again indicating potential for upside. So let's now take a look at the week ahead commencing the 12th of September 2022. Well, on the central bank, we've got nothing really of note coming up this week. And on the data side, it's super busy. So we get UK GDP manufacturing industrial production out on Monday. We get the UK employment report Tuesday, followed by German CPI, the German ZEW survey, and probably the standout data of the week, the US CPI data coming out on Tuesday, that reading of US inflation. We also get the UK inflation report, including CPI on Wednesday, and then US PPI. We get the Australian employment report Thursday, along with US retail sales. And we end the week with Chinese industrial production and retail sales data, UK retail sales data, and the Michigan Consumer Sentiment Index. I'm going to wish you all a great trading week. Stay safe out there, and I'll be back with you next week for another Macro Watch. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.